What's up, everyone? Today we're going to walk you through exactly what we saw that helped us to predict that the market would fall following the CPI release on Tuesday. This enabled us to hit IWM puts for 77%, NVIDIA puts for 262%, and two different SPY trades for 205% and 132%, ultimately helping us to keep our members' accounts safe through the market drop. The first thing I want to bring attention to is the daily time frame for the SPY. As you can see, after we bounced off our supporting trend line for the third time a few days back, we had a pretty rapid climb, and although we weren't necessarily overbought yet on the daily time frame, as you can see, there were 4 consecutive green days, all really big gap up days, so we were already pretty wary of this, anticipating that we would probably fill one of these gaps to the downside. One of the many great tools that we provide within our Discord server and that we utilize within our trading is called Market Net Flow. It is by a company called Tradeitics. Just to summarize briefly, it basically just provides you with this nice little graph that compares all of the total net premiums of all call orders across the entire market on every stock, and it pairs them against every put order. So you get these nice red and green lines, very simple, and that's the white line is the price of the SPY. As you can see, during the later half of last week, it was very strongly bullish, very strongly green, which makes sense considering we had several gap up days in a row. But as you can see, as we headed into early Monday morning, the red line started to spike up, and it did actually end up crossing as we headed into Tuesday. So that was a very notable thing to us. That showed us that the trend was changing to bearish. And that flip of the green and the red lines was a really big indication to us that we needed to be in all puts. Another really useful tool that we use to follow the smart money and that was particularly effective this week in helping us to predict this market drop is Flowago. This is a snapshot broken down by ticker of the largest bullish and bearish flows of the last week. As you can see, Apple sits atop the bullish side, and it absolutely just pales in comparison to the size of the two top names on the bearish side, IWM and SPY. What really stood out to us about the IWM getting absolutely hammered with put orders all week is the fact that the IWM tracks the Russell Index. It's all small cap names. Now, we got to thinking, just considering the timing of the CPI release on Tuesday, let's just say that the CPI, inflation exceeded the expectations of the analysts on Wall Street. What would happen? Well, that would justify the Federal Reserve in raising rates by a more aggressive amount than previously expected. And who gets hurt the most from rate hikes? It would be the smaller guys, the smaller cap names. So it really made sense to us, this whole narrative that was coming to fruition here. And as we saw Tuesday, Nomura expects the Fed to have an emergency meeting now and raise rates by 100 basis points as compared to the 75 that was previously expected. So it just goes to show how effective this tool really is. Alright guys, hope you found this useful. Just wanted to let you kind of peer into our brains and see our mindset for the last few days of why we had so many puts, why we took the trades that we did. So I hope that you found this useful. Make sure to like, comment, and subscribe, and I'll see you next time. Thanks.